Intellectual stew. Intellectual stew with James Kirkland.
Powerful and provocative, prophetic and practical,
Intellectual stew.
informative and inspirational. How you gonna do better if you don't know what better looks like? I do.
Intellectual stew.
Come on, let's talk about it with me, the mind massager.
Intellectual stew with James. Intellectual stew.
Hello. I can't hear anything at all. Everything's muted out, James.
Am I muted out? Am
There
I
you
hearing?
go.
You hear me
Yep,
now?
I
All
can.
right, so it was user error on my part today. That's good. I'll take that. Okay, so I let them know that one of the ventures that I do is I do help protect families, and I let them know that you are my mentor, and you're the one who teaches me about this whole thing called life insurance and living benefits and whatnot. And what I wanted to do today, and I appreciate you because I know that you are so busy. I know you're busy. I thank you for taking out a little time out of your schedule to come in and talk with me and talk to my constituents and let them know the importance of life insurance, why we need it, the different types of life insurance, and how it can benefit them and help protect their family. So let's have, first of all, tell us about Chris TInsman, if you don't mind.
So I have been in the industry for 14 years now. It's kind of hard to believe, but I did engineering, environmental consulting. And when I got into the insurance industry, it was interesting because it wasn't supposed to be a profession. It was just a means to being able to protect and to help my family financially. But what I found is it became almost like a life mission. And I love what I do because I love helping people. And I just believe that it might be one of the most important decisions that most people make in their entire life.
Oh, wow. One of the most important decisions they make in their entire life, huh? Okay, you're going to have to explain that to us a little bit more as we go throughout this conversation. But I'm glad you did because, like I said, you've certainly been a blessing in my life. I'm sharing this to this in a couple of different places so we can get more people on, and hopefully, if they have any questions, they'll be able to ask those questions. But let's go ahead and jump right into it. First of all, why is it so important to have life insurance?
Well, there's a couple of things. I've always believed in, and I can tell my own story, but I had a family member, a sister that died prior to the age of 21. So I truthfully believe, and this is something that I grew up understanding at a very, very young age, and hopefully a lot of you people will never have to experience that. But I've always believed that it is my responsibility as an adult to put myself in the ground, whether it be cremation, whether it be burial. I do not believe that I should be leaving that burden to anybody else. It is my responsibility as a grown up, as a person, to take care of that. You should not have the attitude of, well, I'm gone, does it really matter? Because it does matter. Because the stress of losing a loved one, and then them having to decide what has to happen and what needs to happen, um, for them to feel whole, is stress enough when they lose their best friend or their child or their brother or their mother or their sister.
Wow. That's it. Okay. So first of all, it's your personal responsibility, you said, to make sure that you're able to put your, because you see so many people this day that have a, that seem to have invested in an insurance policy that's not really an insurance policy, called GoFundMe. Because and that typically is more indicative of a reaction
Mhm.
as opposed to preparation.
Mhm.
Am I
And not
correct?
being prepared.
Okay.
That's it.
And what insurance does is that it allows you to be prepared, or in the event that you and your body expires. I hate to say die, but I guess that's really what it is when you die, huh? So
Yes.
is it correct?
Yes.
That's the important. That's one of the importances. Are there any other importances as far as different types of having insurance, or reasons to have insurance?
Well, I think too, that there's a couple of, we can get into the what versus what, term
Mm.
versus permanent, what's good, what's not good, what do you need it for, and what do people use it for. But the new insurance, it's like it's no different. So you have a cell phone, and every 2 to 3 years it slows down because they want you to buy a new one, and you have to upgrade software, right? It's the same
Absolutely.
thing with insurance.
Yeah.
You have to upgrade your insurance. And now with the new insurance, it has living benefits that you don't have to die to use. So for once, the insurance can be used when you get sick. And I think
Okay.
that's important for people to understand, that there are lots and lots of products out there, but life insurance is what it is. It's a death benefit.
Okay.
But the new kind has a living benefit on it that you don't have to die to use. So for once, they got it right, and it can protect you.
Okay. And we're gonna get into this new kind of insurance in a few minutes to learn a little bit what the new kind represents. Because most people don't realize that there is a new kind of insurance. Everybody that I talk to talks about. I even asked a question on Facebook the other day. What were some reasons not to have life insurance? And people were saying, give me. It was some odd answers, as far as And I'll go back and look at them in a minute when we start talking about some of these other insurance. But let's talk about the different types of insurance. I know you got, number one, you have permanent insurance,
Mhm.
and then you also have temporary insurance. Let's talk about the temporary insurance first. What's an example of temporary insurance?
So temporary insurance is insurance that will be enforced for a period of time. It could
Okay.
be 10 years, it could be 15 years, it could be 20 years, it could be 25 years, and the longest term that we actually offer would be a 30-year term policy.
Okay. And so what that means, explain that for the lay persons. And
Yep.
I get it. I understand what you're saying. You're saying that it's only for a temporary period of time. So that means I pay this premium for so long, and then what happens?
So you've paid the premium for so long, and you have had protection for that
Okay.
period of time,
Okay.
and you're paying money into it. And I'm not saying that it's bad, because there is a place in society for term insurance.
Okay.
And term insurance, let's be realistic here, it is to cover your largest form of debt while you have your most debt.
Okay.
Okay? So there is a place.
Repeat that again. Repeat that again. I want to type that. It's to cover your largest form of debt while you have debt. Is that what you just said?
That's correct. So if you
Okay.
have a mortgage, let's use an example. If you have a
Okay.
mortgage and your mortgage is 250,000, you don't want to leave that burden to your family, then get a policy that covers a portion of it. Doesn't have to cover the full amount, but let's do this. Let's protect them so that we can buy them time so that they can make a decision, and they don't have to make a decision when they lost their best friend.
That's it's interesting that you say that, because well, when I first leads I ever bought, I got a call from a young lady who had a house that she was living with. It wasn't even her husband, I believe. I believe it might have been her fiance. It might have been her husband. They might not have been married long. But when I called, he had died the week before, and she didn't have coverage in place, and the house was not in her name. So we know what was about to happen to her, and I couldn't do anything to
Mhm.
help her, and that's the point. That's why you should, and so like it's term more important for young families, would you say?
Yeah,
Because
I
that's when they're going to have the most debt, correct?
Yep, I think when you're starting out and when you have children and when you have a home, that is when you're going to have your most debt and you're going to make not the most money. So, like when you're in your 50s and 60s, you're kind of setting your path, you're making good money, that type of thing. I think that's when you need to start transitioning into the permanent side of the coverage.
But what people don't understand, Chris, is that typically when you are a young family, when and you do have the most debt, that's when term life is the least expensive.
That's
So
correct.
because you haven't, the illnesses haven't set in, the ailments haven't set in, the diabetes and all these types of things. So since your body is still optimal in a sense, then it costs, for the price of a cell phone monthly,
Mhm.
you could cover a lot of debt, in case something were to happen to your family. So yeah, so this is good. This is good. So we got, so we got this is temporary insurance, which is term. Now you said term comes in how many different types? Come in how many years? What 10 years?
You can get as low as 10 and you can get up as high as 30.
Okay. If you say you had, I'm gonna give you an example. Let's do something. Let's do a math problem right quick.
Mhm.
Suppose, say it's a 40-year-old mother, right? Single mother, right?
Mhm.
And she has 18-year-old child.
Mhm.
Okay. And she wanted to get, say, $150,000 cover. I don't want the premium. What term would you recommend? Would you recommend 20 years? Would you recommend 30 years? She's 40 years old
Mhm.
and she has an 18-year-old. That's her
Mhm.
youngest child. What
Mhm.
term would you recommend for that individual?
Depends.
Okay.
Have we refinanced the house?
Okay.
What kind of debt do we have? And what do you want to happen when you die? Not if you die, when you die.
Okay. Okay. So assume they are renting. Let's assume they don't own a house.
Sure.
And like I said, and the kid is in first year of college.
Hmm.
Uh, are we, and this is what, because this is one of the things I've run into when I'm making my suggestions. Am I wanting to have that lump sum while the child um is in a position where they might need that inheritance? So would I go only for 10 years, or do I want to stretch it out for 30 years? Or is that not the right way to factor that?
Well, my thought process is you got a 40-year-old
Hmm.
mom with an 18-year-old child, and they need to go to college. So here's what we know: they're going to go to college, they're going to incur debt because there's going to be student loans,
Hmm.
and it's going to take them some time to get on their feet. So in my mind, I'd be looking at a 15 to a 20-year term.
Okay.
And we can always change that, but I think you need to put something in place so that that child is not devastated and that they do not struggle their entire life. Because really, isn't that what we're here for? We are to leave it better. We're to leave people better than we found them. That's
That's
the
it.
idea.
That's it. That's it. Okay. All right. So now we're talking, for those that have just came in, where we're talking about the different types of life insurance. First of all, we talked about why we need it, and one of those reasons is um, so that it's our responsibility to be able to finance our burial. If we pass, we don't want to leave that burden on anyone else. And one of the ways we do that is with temporary insurance, and the temporary insurance is term life. You've heard that as term life. We at Equus, we use what you call mortgage protection. Explain mortgage protection for those that are listening, Chris, if you will.
So there's a difference between term life insurance and mortgage protection.
Okay.
Um, Term life.
Well, I lost you. Come back, Chris. Hold on, y'all. We don't. She got disconnected some kind of way, and we'll get her back in one moment, hopefully. If she didn't, if we didn't lose her, let me call her and make sure we're good on that one. Y'all, give me 1 second, and we will. Oh, here she is. Hold on. All right, go ahead. Mortgage protection.
I think we had a glitch there.
I see, but we're back. We handled it like a champ.
I know, right? So mortgage protection and term insurance. So term life insurance is a death benefit only. When you die, the beneficiary gets a check. The mortgage protection has living benefits on it that protect the person that purchased the policy, meaning it can now help them if they have a major medical event, chronic, critical, or terminal.
Okay. Explain that. So chronic, critical, and terminal.
Mhm.
Mortgage protection provides and let me clarify this for the people that are listening. It provides a living benefit. In other words, listeners, you don't have to die to receive a benefit.
Correct.
Typically, with life insurance, in order for there to be a death benefit, there had to be a death. But with living benefits, you don't have to die. If you contract a critical, chronic, or terminal illness,
Mhm.
then the benefit can pay while you are still alive. Give some examples of what that does pay for us, Chris.
Yep. And I think that in my mind, this has got to be one of the best inventions. It doesn't cost any more than a regular term life policy.
Okay.
So, terminal illness, let's start there, because if you were diagnosed with a terminal illness in a 24-month period, a doctor certified that you will probably die, they will give you the entire policy, 100% of it up front prior to death, so that you can get your financial debts in order and spend the quality time with your family without the anxiety.
Wow. That's great. That's amazing.
It's
That's
pretty
amazing.
powerful.
That is very powerful because typically that's when you're going to have the most financial problems because you can't work. Your way of living is affected, and that amount of money would definitely help to make those last days or that last period a lot easier. So that's you said that was with terminal. Is that with all of them? Which one did you just say
That's
right
just
there?
the terminal.
That's just a terminal. So what
Mhm.
does it do in the event of critical or chronic?
So, in the event of a chronic illness, and to give you an idea, we can use an example. Let's just call it a 40-year-old in the hospital with COVID for 4.5 months.
Okay.
If you had $1 million policy, the policy, after being sick for 90 days, it would pay you 24% of the face amount of that policy.
Wow. So
So
someone would have been
in that case, it'd be a $240,000 check to the person. Now, I know people are going to say, "Well, I got Aflac." Well, let's decipher. Let's separate Aflac from mortgage protection. Okay.
okay.
So Aflac's going to pay you daily being out. So let's just say you're out for 4.5 months. Well, it's going to take you 4.5 months to accrue that $13 a day that you get to be able to pay your mortgage. Where this is going to pay you lump sum for that 24%. And then you can pay your mortgage, your light bill, your water bill, your car note, and you're not going to fall behind. Big difference.
That's that's a huge difference. And that's one lump sum
One lump.
after the 4 months.
The
Wow. So
90
that
days.
90 days, 90 days, 90 days. Yeah, that 4 months. Yeah. Wow. So okay, that's good. Those and listen, trust me, more people are listening to the replay of this that are listening live now, and this is good information. So I appreciate you, like I said. So give me an example of a critical illness and how does that payout work?
Okay. So under the critical illness, it is heart attack, stroke, cancer, diabetes, loss of limb, ALS, and then organ transplant, major medical organ transplant. So what that does is, everybody always asks, is there a catch to it? Well, it's not a catch. Let me give you an example. It's based on your remaining life expectancy. So let's use the best example: heart attack, age 42, male. He damages 40% of his heart. So now he's only operating on 60% of his heart. So let's just say he goes to rehab and he regains 20%. Well, then the doctor's going to say your remaining life expectancy has decreased by 20%. Therefore, if you had a $100,000 policy, they would cut you a check for $20,000.
Okay. And that's not meaning that only one that means that you're definitely destined to die, of course, is the terminal illness, right?
Correct.
You can live a long time after a critical illness. Okay.
Yes.
Okay. So y'all there is a formula for that. So if you do contact me and you're interested in insurance with living benefits, and you have to qualify for that, of course. But when you do, I can let you know what that table is. All right. So we've been talking about temporary insurance. Let's talk about permanent insurance for a bit.
Yeah.
Okay. What are the different types of permanent insurance?
So there are two types of permanent insurance. I'm going to make it very, very simple. There is one that we can set you up to create a retirement account, and there is one that we can set you up that pays for life, and your premium is locked in. So your premium will not go up, and it will cover you to age 121.
Okay. What are the names of those policies?
Well, you've got a whole life policy,
Okay.
and then you would have I would call it a universal life, but it's got a locked in premium to it. And that would be, we could set that up for a retirement plan. If your 401k is not performing, if you're behind on your retirement, we can have a different conversation probably for a different day on that.
Okay, gotcha. But but let's talk about the final expense policy,
Yep.
the whole life.
Mhm.
What are the features of that policy?
So on the new whole life policies, they actually have the terminal illness rider on them as well.
Oh,
So
do they?
that does come with that as well. Yes, sir.
Okay. I didn't know that.
Yep.
But whole life is typically a little more expensive. Why?
Because it's for your whole life.
Okay. And that's locked in. So you're not so it's not so as we talked earlier about term life, how a policy could be for 10 years, 15 years, 20, 25 years. It's for that specific term.
Mhm.
No matter what your age is now,
Mhm.
whole life tip is that premium is gonna be level from now on, and we know what the death benefit is going to be, and it also gains cash value. I'm correct?
Yes, it does.
So it does accrue cash value. Now, Chris and I can set up different types of plans that get a little bit more interest, depending on how we set those. Like explain what's the universal life. We don't have to get into the index universal life, but just a regular universal life. How is that a uh, work as a retirement product?
So here's the problem with universal life. Most people that you will sit down and talk to do not know how to run an illustration, which
Okay.
means they are going to underfund it instead of overfund it. Overfunding a universal life policy can potentially yield you between a 4 and a 7% return if you do it properly. And we
Four
do
and
know how
seven
to.
percent.
Yep, we do know how to do it properly.
Wow, that's more than any bank is doing.
IRAs, anything like that, IRAs, mutual funds, bank accounts, anything like that. It's just not, it doesn't perform.
Okay. Well, that's going to be a fun conversation, but like you said, that's a conversation that we need to have
Another
that
day.
we need to have on another day. But just to recap a couple of things that we have talked about that we want to make sure that we talk about. There are two different types of insurance that we're mainly focusing on, and you can stop me anywhere along the way. We're talking about temporary, which is your term insurance, your mortgage protection. Mortgage protection, one of the best features about that is that it does come with living benefits. Folks, if you have an insurance policy, go and check it today. If it does not have living benefits, you need to reach out to me and you need to figure out how you can get living benefits in your insurance policy. So you need to reach out to me today and we can get that worked out. So we have term life. That's your mortgage protection as well, and your term life. And then we also have whole life or your permanent insurance.
Mhm.
It's a little bit more expensive normally, but it is for your whole life. And you just gave me some good news. Did they just start the terminal illness ride, or has that been around for a while?
No, the terminal illness rider is the one that most people in the old insurance policies, you actually had to select it as an option, but in the new policy, you automatically get it.
Even with a final expense.
Yeah.
I thought I'm okay. I need to study more. Y'all forgive me if y'all charge it to my head and not to my heart. I promise I'm gonna do better, y'all. I want to be like Chris. I promise I do. Uh, uh, she's somebody Elijah Juan Ridgeway. Now he's very intelligent, so he has to ask a question. And Chris, you ready to answer it?
Yeah.
If insurance is paying 4 to 7% of their if insurance is paying 4 to 7%, where are they investing their money?
A lot of them they have their holdings inside of their account, but there's one in particular. There's an index that some of them use. It's called the Barclays Trailblazer, and you can look that up. But we don't do a lot of the companies don't do S&P, and if they do S&P investing, then the reality is that they're doing 1 year point to point or 2 year point to point, because it gives you a better overall average of getting a higher index.
Gotcha. And the next time we do this, when we really did, because Elijah, we're trying to keep it basic today. We were just letting them get a few overviews, but she's gonna come back and we're gonna talk about IULs and indexing out, because there's a line graph I could show you of how it moves from how it moves from point to point, and it keeps you from losing money when the market does not perform. You're still safe, but when the market does perform, you do get increases in gains. So we'll talk about that at another time. That's we talk about, and listeners, I can't wait to tell y'all how to make $1 million baby if we start this thing off right. But you got to start it off right. People just don't know. You're under the misperception that insurance only pays if you die, but insurance can pay you for the rest of your life if you do it properly. If you do it properly, and it's safe. It's safe. It's not. Probate can't touch it. I mean, none of those creditors and debtors can't get to it. It's yours. So it's one of the best investments that's out there. But the first thing you do before you move into investment, you need to move into protection. And the way you protect your family is with permanent product, which is term life, or if you want living benefits, it's what? Mortgage protection, right?
Mm-hmm.
And if you want whole life, that's going to be a permanent level premium, but it's going to ensure that you are covered in the event that you pass away. Chris said it a moment ago. Chris said that what you said is our responsibility to do what?
Protect and to put yourself in the ground, not other people.
You do not have other people trying to put you in the ground. You need to make sure, don't leave that burden on your family. Don't leave that burden on you.
Stressful. It is not, it's not what we're here for. Relieve that stress. Pay that $30, $40, $50 premium. Here's the reality. Okay. For under $50, you can get something to protect your family. And here's the thing. You pay $100, $200 on a cell phone bill, and you mean to tell me that leaving behind the stress and anxiety of what they're supposed to do with you makes you feel any better? I mean, you can't go to Chick-fil-A for $50.
Huh? Not with a full family. Not with a full family. It's gonna cost you $30, $40 at least. And if you do that, but you're too irresponsible not to. And that's really what it is. It's being irresponsible. And when I was married, I remember sitting at that table, my ex-wife and I, and we made sure we bought a couple of $100,000 policies, to make sure that our children were taken care of, that the other one could continue to move on in the event that the other one expired or whatever, or died. I don't like saying the word died. I keep wanting to use the word expired, but it died is one syllable, expired is two. I guess I've saved my breath and just say died. How about that? But
well, I mean, if you think about it, we're real people, and there are some things in life that are going to happen, and taxation and death are imminent. You cannot get away from them no matter what happens. So it's a fact. The people who think it's never going to happen to them, shame on you. Mm-hmm. I'm a firm believer that you prepare. And you do need to prepare, because I think that it relieves the stress and anxiety. And I know that things are tight these days, but your priorities have got to change. And if they haven't already changed, then maybe we're doing something wrong. Maybe we need to sit down and have a conversation, and maybe we can help you budget, because really you can very affordably protect your family.
And that's what we're doing today. We're having this conversation so that my listeners can just hear the conversation. I mean, I had a woman last week, I think, insure herself, and she was about 40, for like $20. I mean, it was term life, but she got like $50,000, $75,000. It was something, and it wasn't no more than $20, $25. Now it doesn't pay me a lot of money, but it definitely gives me satisfaction to know
Mhm.
that I have a client that's covered. And I mean, and this is a question that's off the rip, and I know you, as long as you've been doing this, how many families would you say you're protecting?
I write 390 applications a year. I've been doing it for 14 years. I
Wow.
got thousands and thousands of clients.
Really, really. All right, and so we've been on here for right at 30 minutes, so we're going to wind it on down. But let me ask you a question. Tell us about the business aspect of this. How could a person that's interested in doing this as a career or maybe part time, how could they go about doing something like this?
Yeah, so that's a great thing. Think about it in terms of this: help yourself, help other people. And if you love to help people, and you're that single mom or the single dad, or even the mom that stays at home that wants a part-time job or a full-time job, we now have a 100% virtual platform that we can plug you into. You do have to get a license, but I will tell you, our part-time agents are making between 70 and 80,000 a year, part-time, 2 days a week.
Wow, $70,000 and $80,000 part time, and don't have to leave the house.
Nope. Slippers, sweatpants, sweatshirt, cup of coffee.
Wow. And make it 70, 80. Yeah, because I've heard you talk about some of the weeks you've had. So I guess I guess that and I'm gonna tell you something. She's special for real. She's special. She's one of those people you read about who writes the books and gives the because she's put her hands on it and absorbed. Well, now she's read it. Her eyes have absorbed it, and she regurgitates what she heard, and she personalizes it and makes it real. You said something last night about there was a difference between. You don't think I pay attention, but I do. The difference between, and because we're going to segue out, but you talked about the difference between motivation and inspiration. Tell us that right quick, and then I'm going to let you go, and we'll go from here.
Do you want me to read the post?
I would prefer if you want to, because I want it to be. If you can say it, you can criticize it, or you can read the post. It doesn't matter
Well,
to me.
and because I think that people have to understand too that momentum is a very, very important aspect of life. And what you do with your life is important. So motivation aims at some sort of external reward, whereas inspiration comes from within and is very much its own reward. Although inspiration is associated with creative insight, creativity also involves the realization of that insight, which requires opportunity, means, and above all, effort.
Mm.
So if you think about that, let's make it happen with, just one step. Say, okay, I'm not happy with where I am. I'm not happy with my situation. Well, let's change it then. Call James. James will call me. We'll sit down. We'll put together a plan. But I mean, we really believe in helping people. And I think you can help people a couple of different ways. You can let, a lot of things go from your head to your heart, number one. Number two, it's not about your paycheck. It's really about the protection that you put in place for your client. And protection could mean a couple of different things. It could mean protecting them in the event that something bad happens, or it could mean creating an additional part-time income that allows you to stop living paycheck to paycheck. And right now, I think that that's huge.
Yeah, I treat it part time, and you've been trying for the last year or so to make me go full time. And I would have been there if I didn't have something else supplementing my income. But I see but to be honest, what I've done just with the few policies that I've done, or whenever my back was against the wall and I needed to sell a couple of policies right quick to pay a couple of bills, it's been there,
Yeah.
but more than anything, I watch the fruit when I sit on the actual calls and listen to the some of the people who give their testimonies and their experiences every day. And y'all, I'm telling you, it's people literally making seven, eight, $10,000 a week doing this, but they treat it like a full time job, and they don't. They I mean they sit here and they work from home 8 to 10 hours a day, and those are full time. And the formula is 6 days, 4 days, 6 appointments, and you should be making a really really good living, better than most of us have probably ever lived before. But I want to thank Chris for coming on and for talking about the different types of insurance. If you are just now tuning in, the replay will be available on my YouTube page and on my Facebook page, and you can get all of the questions. We did a very surface view of the different types of insurance. This call was not meant to answer all of your questions. Some of you all have not asked a question. And if you do have a question, you better ask me now while she's on the phone, because you might have to wait, because it takes me a couple of days to get in touch with her sometimes. So I need you all to go ahead and ask those questions if you have them. Otherwise, give me a call if you're in Arkansas, Texas, Tennessee, Georgia, South Carolina. Give me a call. I am licensed to write in those states, and I can go ahead and help you get your family protected. I'm getting ready to put my number on the screen. And if you are in need of protection, it is not that hard to protect your family, but it is definitely your responsibility. And we have something in place to help everybody, no matter what your state is. But what you need to do is and I'm not trying to get in your business, but you do need to get protection. For real, you need to get protection. So somebody said they have questions about annuities. What state are you in? Because I'll contact you, and I'll help us get in touch with Chris, and we'll be able to answer those questions for you. Chris is an expert with annuities. She's really an expert. That's her thing. So Trinetta Lariba, that's my phone number. Text me, call me, or whatever. And we'll get those questions answered. Are you in Florida? Are you licensed in Florida, Chris?
Yep.
Okay, Chris can help you in Florida. So Chris can help you in Florida. So text me to that number right there, and I'll get your information over to Chris, and Chris will be able to answer those questions for you all. Okay. That's my friend. That's my friend. So those of y'all that are listening, I appreciate you all. Listen, we do the Intellectual Stew every Monday night. We have some very in-depth conversations. This is a pop-up. We're going to start doing more and more of these insurance type talks, these financial type talks. Normally we do relationships and parenting and all those types of things. Tonight we're not having a show. We're not having a show. I want y'all to spend some time with somebody you love. It's happy Valentine's Day to you. Happy Valentine's Day, Chris.
Happy Valentine's Day.
Why you didn't send Thunderstorm no chocolates?
Thunderstorm. It's sunshine today, buddy.
That's my friend. That's my friend. So hey, thank you for your time. Thank you for listening. If you have any questions, that's my phone number. Let's go ahead and get you protected. Trinetta, we're gonna get you taken care of on those annuities. Chris will be happy to assist you, because she is licensed in Florida. I am not. She'll take care of that. And we are out of here. Y'all like and share this so someone else can be blessed with this information as well. See you, Chris.
Intellectual stew. Intellectual stew with James Kirkland.
Powerful and provocative. Prophetic and practical.
Intellectual stew.
Informative and inspirational. How you gonna do better if you don't know what better looks like? I do.
Intellectual stew.
Come on, let's talk about it with me, the mind massager.
Intellectual